This is your hand. Put your hand at the screen. And if the candles are higher than your hand, then that means it's probably a buy. So there you go. So the candles are up over here. Direction is that way. That means you look, and your hand means goes up.
Resistance on 4 hour, go to the 1 hour. Alright, so this is where I like the sells, because when you look right here, this was support created late in New York, got broken in Asian, did a retest at London, but also created support here as well.
Right.
Right here.
Yeah, that's what I had my chart.
Yeah. So basically, I'm expecting it to boom, boom, boom. Maybe it's doing some sort of a retest, and then boom, down here. This would be the best case scenario.
Yep, that's what I was looking at. I would like it straight out of the consolidation, out of that area.
Yeah.
And push down, do a little retest up, and continue down.
Yeah. Or if it breaks above here,
yeah,
then I think then bullish would get a little messy because of all of this traffic here to the left. So this is where I wouldn't want to get stuck. I'd rather get this move up towards, 130. Right here.
Yeah, that's basically what I have on my chart.
Yeah. Because the thing is, if I take a sell right here, there's a 50-50 chance that might move up or move down because it's in this range. And you got to put yourself in the best possible position for the best possible outcome. Could you explain your thinking on GJ sells rather than buys? Yeah, so basically if you look on the 1 hour, the 1 hour candle created support here in late New York's session yesterday, broke it in Asian, made a support there in pre-London, made a resistance at London, now it came down, made another support. So, now we're just waiting for it to break below 128,900, and then we're going to go down all the way to 128,300 even, or maybe like 128,500 is going to be safe. Yeah, so just waiting for this 30-minute candle to close. If it closes bearish,
if it closes bearish, I'm going in.
All right, how big is this candle? Let's measure this candle here. This candle is 8 pips.
Gosh.
I entered a sell on GJ.
Look who's back.
I have entered. Player 1 has joined the fight.
Yo.
I'm really expecting this 4 hour to go bearish. Let's put it that way. Because this 4 hour, we had support here.
Yeah.
And then
started, right?
And then this 4 hour made it like a wick here, right? This is the wick the 4 hour made. This one tried to go up in pre-London, tried to go up and close below the same area. So this current 4 hour, it formed maybe like almost 2 hours ago. So this should continue down and fill at least this wick. This is what I'm looking at. Based on the 4 hour time.
The 4 hour just started.
Yeah. Alright, I got 10 pips here. Gonna secure 10 pips, put stops at break even. Letting a runner run. Nothing is easy. Do not misleading dude. Well, trading is easy. I mean, the only problem is you don't wait. You know, if you're not going to wait for candles to form the way you want them to form, if you're not going to wait for the candle to especially turn in the direction you want it to turn, trading is going to be really hard. Why? Because you're going to be start to fuck yourself every day. It's not going to make any sense. You know, like when I came in the charts, I did my analysis. I'm like, okay, you know what, this happened. Now I'm looking for sells, you know, so okay, perfect. So, and then once the 30-minute candle started to go in my direction, I saw that as an opportunity. Okay, I can probably enter now, and maybe, you know, it's going to go to a profitable trade.
Right,
Right?
executed the right thing.
Yeah, but the other side of the coin is, if it would have hit my stop, I know that I traded my plan.
And you stuck by it.
Yeah.
Who are you
So
talking to, by the way?
yeah. So now if you look on the 1 hour, the 1 hour is looking really good too, because this 1 hour closed below these candles here. Right? So this gives more evidence that it should continue down to at least for
Could this candle be retesting that support?
Yeah, so basically now if you're anticipating this candle to continue down, what's it doing right now is just creating a liquidity wick just like this. Oh, G just stopped my runner. Oh, too bad, so sad. That was a good trade. I think I'm done for the day. So when you look on the 4 hour on UJ, let's remove everything here first, because that's how you're supposed to do analysis. Alright. Look on the 4 hour, and we see that the 4 hour created some sort of support here, right? So we're like, okay, well, it makes sense. And then when you take it left, you're like, okay, yeah, it makes sense, because this was resistance, now we have support. Let's go to the 1 hour. 1 hour is bouncing off support right here. And then 1 hour also created some sort of a resistance here, right? There you go. And then you got another, for now, UJ is consolidating. Basically, UJ is ranging now. So just, if you're trading UJ, you have to wait for a break. There's no such thing as a swing trade template, as a scalping template. There's no such thing as that. I mean, you need to really understand why price is doing, what's happening, or like if it's heading down, why is it moving down? Or if it heads down, where is it going to go down? All these things you have to keep in mind. What's the 4 hour doing? What's the daily up to? Daily is going bearish. Okay, what's the 4 hour doing? 4 hour has a wick to fill here. Okay, perfect. If the 4 hour has a wick to fill, what are the smaller time frames doing? What things you should be looking for if it's going to head down? You know, when price heads down, what did Mr. Warren Buffett said? Buy low, sell high, right? So if price is heading down, you have to look for the high points on the smaller time frame.
Mr. One.
Right? So you go here to 30 minutes, you're like, okay, perfect. So it made a high over here, right here, 129.340, and then it made another high over here, lower high, 129.100. Okay, sell high, and we sold, came down, price did another retest. Now it should, you know, keep on dropping. So you should always look at these things. And whenever price moves, understand that if you're looking for a swing trade, 70% of the time your positions are always going to get stopped out. Always. That's trial and tested. You know, so that's why I'm a big, huge advocate to please secure profits. Let your runners run. Let a portion of the position do the dirty work.
The nasty mafia word.
Yeah, exactly. Because it makes no sense. You come in the charts, you wait for hours, and you take a trade, and at the end of the day, the trade stops you out because you didn't secure profits. Doesn't make any sense.
Like, it's basically wasting time.
Yeah. If you have a bad entry, then you're probably not waiting. You know, and when you don't wait, and you have a bad entry, you take another entry, and then you take another entry, and then soon you know you're over trading, and then you know you lose more, and then you cry. You're like, oh.
these questions with where's the fake out and what time frames, it's all based on your trading plan. If you're a swing trader, do you care about the 15-minute time frame? If you're only looking for 5 pips, are you looking at the 4-hour time frame? It's just you have to put things into perspective, and you have to apply concepts. Concepts can work on every time frame. It doesn't matter which time frame you're using. You have to understand what exactly is happening in the market. That's the most important thing. Every day we go through the same shit. I don't understand why people just don't watch these things. They don't study. They just keep asking and regurgitating the same question. Who cares what a fake out is? Does it matter? Does it matter what a candle pattern is? Your objective is to execute a trade and have a target. Whether it's how much am I going to lose? That's your first target. And then how much is my possibility to win? Those are the only things that you have to worry about in trading. That's it. All this other stuff just clouds your mind. Like, I don't know what a fake out is. I don't know what a retest is. I don't care what candle patterns are. All I know is if I see a candle going down, I look to the left and I look to find the target. And chances are that the price is going to go that way. If I'm looking at a trend that's going bullish, I look to the left and I look for another target. Chances are it's going to go to that target. That's all trading is. That is all trading is finding targets and aiming for those targets within a trend. It's just a straightforward, simplistic way to trade. That's all you're doing. And if you can't do that, sit on a simulator, go Google simulators, sit on them for hours and practice that. And then when you come to the game, you will find targets and you will practice that and you will hit those. And if you don't, your risk management will save you, and then you will go back and say, why did that target not get hit? Chances are you were at a major support, at a major resistance. You didn't wait for a candle to close. That's all it comes down to. It's just very, very straightforward. That's all it is. It's nothing more than that. I don't know. I think everyone's looking to make things complicated because there's money involved. I think that's what it comes down to. And I would never make this complicated. There's money involved. I want to make it as easy as possible so I don't have to kill myself trying to think about all the different variables.
Simple as this. The daily is bullish, the 4 hours is bullish, the 1 hour is bullish, the 30 minutes is bearish, the 15 minutes is bullish. What are you going to do? Take sells or are you going to take buys?
Damn, Kevon, you
Buys.
were fucking fast.
Exactly, Kevon.
Kevon was super fast.
Yeah.
He just came out the booth.
It can't be any simpler than that. And Ted explained it perfectly on that webinar yesterday. Replay that webinar. He dropped some gems on it. And he continued call buy. You didn't hear one he called sell. Why?
That's right.
Because we're bullish momentum.
That's right. Yeah.
You guys are trying to make fucking trading difficult, man. Like, make it simple. Like, what the fuck? Go with the trend.
You need to know when to go in and where to put your stop loss. Yeah, you have to place your stop loss according to your plan. Right? Where your stop loss is used to protect your account. So if you look at the trade, if you look right now, if we look at GJ right now, this is where a stop loss can be, and this is where a stop loss can be, right? So stop loss, right? So we've done that. We've said, okay, these are our stop losses. Now, if this here is where you want to enter, how many pips is this? Let's see, 10 pips, right? 10, 15 pips. That's your stop loss, right? So we've done the simple calculation of a 10 to 15 pip stop loss, right? We can all agree to that? Okay, so now how do I get a positive risk to reward? Okay, so I have to look, okay, let's see, this is 20 pips, 30 pips, 40 pips. So here's a 40 pip gain right over here, right? So this is your target. This is 40 pips, right? So now I have a 2 to 4 risk to 2 to 4 pips. So you're basically a 1 to 4 risk to reward, or a 1 to 2 risk to reward. Okay, so this is positive. Okay, now I figured this out, and now I have to evaluate, and I have to say, okay, if I take a trade right now, what am I running into? So does this trade make sense? I can say either yes, because I believe that we're early and we're going to break, or no, I don't like this support. So I will place a trade below that. That's all trading is. That's all trading is. What did I do here? Did I say that this is a double top, that this is a double bottom, that this is a bad pattern? I didn't. All I did was evaluate my risk, my reward, and does my trade make sense? That's all I did. That's basically all it's come down to, and that's all you're doing. So tell me where there's problems with entry and exit. There's problems with entry and exit because you're impatient. That's the problem. The problem is people don't want to wait for a trade, and then they jump in, and then they put their stop, like where the candle, they put it right over here. So you put your stop essentially, right here, right? Your stop goes right here because you want only a 4 pip risk, and you want to get like a 10 pip reward, and then it stops you out, and you're like, oh, trading sucks. When meanwhile, if you had placed your stop above here, you would have let the trade run, and it would have gone down right to here. But because you're not patient enough, and you need to get in right here because you see candles, that's what burns you. It's just because people are ignorant, and then you know what? You come on this stream, go find something else to do. Go bug the internet. Go on message boards and write out your crap there. Like here, people are trying to learn, and there's things people are trying to do, and it's just like makes no sense.
So EJ reached target here. So if you're in sells, stops are break even.
I'd just be aware that as we come down here, we're coming towards the New York Open, so we might just make it to this level here, which is all this, and then we may retest up again. So just be aware of that. Yeah.
Also, consider that the 4-hour is filling this wick, like we talked about.
Yeah. That's where the initial target will be, and you'll find that there might be a pullback, bounce up, and then continue down into the. So just be aware. So there's lots of opportunity if you miss the first entry, or if you trade GJ.
Oh wow! What a nice analysis.
Yep. It's going. Keep going.
This is where your stop should be a break even, and you should just laugh it off. Yeah, because I was looking at this.
Yeah,
because
that's exactly what I was looking at, and I didn't want. I wanted to get that and maybe close at that point, but I'm sort of like, I think we still have more legs in the next hour. My only fear is the retest. How big is this candle going to be? Said, what happens during news or NFP when spread increases? Okay, so I think we talked about this yesterday, but I'll talk about it again. If you go to a store and you go to the mall, because you're in the desert and you have to buy water, and there's only one store that will sell you water, and you need that water because you're thirsty and you're in the desert and it's hot. Do you think the store will sell you the water at a good price or a very bad price? That is what happens when you are in news events. The brokers know, the liquidity providers know that you are going to trade the news events, and there's a possibility for them to lose a lot of money very fast. So they are going to make it as difficult as possible for you to enter and exit trades And if you're going to trade those positions, you're going to have to pay to trade. And that's why spreads increase. That's why there's slippage. They're doing everything in their power not to lose money, because they are offering you a service at a time where you can make, you know, very fast money in a relatively short time. And this goes back to the whole thing when it comes to the process of, you know, flow in the market. When a bank can hedge the flow, they don't care how much they win or lose, because they know in the long term their risk has been satisfied. But in news events, your risk is never satisfied because of that. Is it too late to get in GJ cells? Well, we'll take a look at the time that we're coming into the market, and we're coming to an hour close with the candle. So now here's a little tip. You see the candle starting to pull back? Look at this. 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 Okay, so now you show me the characteristics of the candles, and you ask yourself the same question. Would it make sense with the hour closing to then have an entry right now, knowing that each hourly candle has created a wick that we've just highlighted? So this is the question you have to ask yourself.
Nice.
Wow.
Yo,
DJ is good.
reach target.
Yeah, I reached target. Yeah, that's like, I was about to close because I saw that there. I was like, oh man, should I just close? Because I reached target.
Man.
How do you calculate stop loss and take profit? I'm new to Forex. Yeah. Okay, so the idea is, once again, you figure out your overall risk. What is it that you want to risk? And the idea with the risk is you always want to have a positive risk to reward. So when you look at that and you say to yourself, okay, what's my positive risk to reward? Like in this example here, this trade, obviously we're looking for targets. So my target is right here, because I see that this is a rejection. And you can almost say that this is a zone, like a demand zone, right? The reason why I say this is a demand zone is because we have a single tap. So this single tap down, rejection, and then we shoot all the way back up. So now that we have this rejection over here, price is now driving, and where is it returning to? It's so here, then you have to say to yourself, okay, if I believe that my target is here, so I have to measure out my target, right? So I have to measure this out, and then I have to say to myself, okay, what is going to be my risk to accept for that? And if I can't find a particular proper risk here, I either have to change time frames or I have to not take the trade, because at this point we don't know where we're going to move in terms of that trade.
And what you got to look at is that, okay, since this was the move down that you missed, right? Now you have to see that, okay, how could you have taken this move down? Maybe, like, you know, after this candle closed below, you could have said, okay, well, you know, we got no traffic here to the left. There's this support here, so maybe I can ride this all the way down here. So that's what would go through my mind if I, you know, looked at a chart like this.
You know, what you'd have to do is you'd have to say, okay, what makes the most sense, or what are you comfortable with? Like, obviously, you know, looking at, I just said my target was over here. For me, I had already gotten 40 pips. The additional target was only 30 more pips. I'm okay with not having the full one. But the idea is you need to understand where you are entering the trade, and then where would your risk be? And in this trade, in this case, as an example, if people took this trade right now, if they took this candle right now, the hour candle, this is a continuation more likely of this candle here. So what I'm worried about is once this candle reaches, say over here or over to here, there could be a violent pullback. So I just didn't want to be a part of that. And that's the reason why I closed my position. The fact that it'll run probably to my target is irrelevant. You know, I'm only aiming for 10 to 20 pips every trade. This one I got 42 pips, so it went above what I was expecting. So I'm okay with that. And the idea, once again, is you can see the reason why we laid this out. So Rakil, when he jumped on the stream, he explained this chart. Said there's, you know, this, and then this candle ended up rejecting. Once we broke this support, then this candle moved down. Where did it move to? You can see it started to come into this zone and then eventually into this zone here, right? So when you start looking left, you start mapping out these targets. Now what you can do is if you're still in the trade from up at the top, so if you're still in the trade from up here, you can now go to your 4-hour chart and say, okay, where is the 4-hour target going to now at this point? Because you can see the hour candle is very strong. You would say, okay, my 4-hour target is probably over here. That's probably my 4-hour target. Knowing very well that in that 4-hour time frame, the candle can move up, it can move back down, it can move back up, but you're no longer watching the hour candle anymore. You're moved to a higher time frame, so you're not watching this candle anymore or this candle. You're just watching the one candle go up and down as it moves through price. And that's how you hold your trades longer. Because if you turn around and you watch like a 5-minute candle in this hour candle, it'll shoot up and then it'll shoot down. You're like, oh, I got to close. But if you're watching the 4-hour candle, you'd be like, oh, okay, perfect. I can just keep holding it. It's just pulling back a bit and it's doing whatever it's doing. What I do is, I mean, I sort of have an idea of what, like I know Wednesdays and Thursdays are always going to be very good days in the market. So I'm usually, you know, for lack of better terms, a little bit more excited. So I'll try and take more positions. The thing with GJ, I didn't take gold. Obviously, I should have taken gold because I know it would be going bullish. But I mean, I'm trading such a large lot size. I don't really need to run around. And what I'm trying to show people is if you take one trade, you should be able to manage it and run it properly. So that's why I was trading GJ, because I said where GJ would go, and it ended up going there. But I closed like obviously 20 pips early, 30 pips early. But it's just more of the fact that when I look at what opportunities are there, it's more of how much of a range is there. Like with GJ, I knew the range was going to be very, very big once we broke that support. So that would probably be my best trade. Obviously with gold, you can see it's running pretty well. It's moved all the way up to 1497 now. If I was watching it more carefully, I would have probably got in at like probably 1490. Because of the fact that on the 30-minute, once we broke resistance on the 30-minute at 1491, we're off to the races. Like there's no stopping it at that point.
Yeah, admin.
Follow-up question, Ted. You mentioned Wednesday and Thursdays are your best days. Could you describe the other days and what you're anticipating usually?
Yeah. Okay. So on what I look at is Mondays lately, and we talked about this a little bit yesterday, is Mondays usually have, for the last, I think, about 4 or 5 weeks, continued trend from Friday. The reason why I say that is because gold has moved very hard between 8:30 and 9:30 p.m. Eastern on Sunday night, which is basically Tokyo Monday morning. And that's been a continuation from the previous day's moves on the Friday. And what I've noticed there is now Tuesday, the candle pulls back to sort of set up and sort of recharge before it continues on. What I'm looking for is Monday and Tuesday for the market to set its pattern or set its trend. And then Wednesday and Thursday, I'm looking for it to complete or push through that trend. And then Friday, there's usually a pullback. So what I'm doing is I'm managing my risk. I'm not applying full risk on Mondays and Tuesdays. I'm usually doing like half, or like maybe, you know, like a little bit less. Like if there's an opportunity, I'll take it, but I'm not focused 100% on trying to find the absolute best opportunity because the market's still a little bit shifty. come Wednesday, Thursday, you can see today we have clear, decisive moves. So here's where I'd be actually hunting and saying to myself, okay, what is the best opportunity for me right now? And the way that GJ was set up in today's webinar, you could see that there was a clear target on the hour. And Raquel marked a couple of targets, which were all valid, but there was ultimately a deep target that you could potentially hit based on the characteristics of GJ. We know GJ in an hour candle can do anywhere between 10 to 30 or 40 pips. So the way that it was structured right now, the fact that we had not even entered the New York session yet and we were still that deep in a sell, that means that there's a possibility for it to continue to run, knowing that you have the USA currency market open, and also we have coming up the London close. So right now and within the next 2-3 hours, there's going to be additional volume pushes into the market. Now that's just from experience, and that's from you studying the charts. The fact that if you look at the daily candle and now you look at the weekly candle is in full formation. And what I mean by that is you have a clear direction on the weekly candle. And if you break the weekly candle down into 5 days, you're doing a similar breakdown that you would do with an hourly candle using like 15-minute time frames. The first 15 minutes will always have a little bit of a pullback, and the next 15 minutes followed by that will start the trend. It's the same thing with the daily candles when you look at a weekly candle. The first couple of days, we have a little bit of a pullback, and then what happens towards the middle of the week, we actually get the trend, and then towards the end of the week, we have that push all the way through, and then towards Friday, there's usually just a bit of a pullback because orders are leaving the market during the week. That's something that people should be back testing, and that's what you should be reviewing on your charts so that you understand that, hey, Friday might be a pretty messy day, so I have to reduce my risk and not get caught trying to get overzealous because Wednesday and Thursday I caught these huge moves, and now I'm expecting the same thing to happen Friday when I don't understand the dynamics on Friday where we have a pullback, not necessarily a trend continuation, because think of that, it's a weekly candle closing similar to an hour candle closing. When we have an hour candle closing, what do we normally have? We normally have a pullback. So it's the same thing for a Friday. If you correlate a Friday close with an hour close candle, right? There's usually somewhat of a pullback. And also, more importantly, if you look at the sell and you look at this target here and you see this wick here, that's the reason why I say sometimes it's better to get out a little bit early, because you don't know how hard that pullback is going to be. Because now, essentially, if you're in profits, your profits being pulled all the way back to basically the hour that we started with. And that's the reason why I say you have to be very conscious of the various levels on time frames so that you map out your target appropriately.
Yeah, that's 24 pullback.
Yeah, but that's what I mean. But if you recognize that and you work within the markets, you'll realize that these are things you have to be cognizant of all the time. And the reason why we had that pullback is because, remember, I was talking about we didn't really have a wick here built. So we knew that, right, and we knew that we were coming to this target. And what happened when we had that target? It was that pull up. So this, obviously it's not a bullish candle to say that we're moving in this direction, but what it is, it's basically the toes, like, your little foot touching the hot water here and saying, ooh, I don't like that, and leaving, right? Because think logically, what's happened is all these orders from up here, or even up here, have said, okay, I've taken orders here, I've gone and I've deposited the orders over here. From this deposit, now I have a bunch of orders up in this area here. I have to return them. Where do I have to return them to? Well, I can start to return them here. I can start to return them here. And then ultimately, I'm going to return them here. So knowing that, as you come into the trade, you can now map that out and say, okay, if I enter over here, my target can work to over here. If I entered the trade over here, up at the top, I can close over here. So that's what you're doing. You're essentially managing where your exits are going to be based on where you see rejection. Black Box CryptoBot, he bought at 128.292. That's perfect. Now, so here's the situation. So that's actually a good example. So someone bought the bottom of that range, right? So that is what we consider a high-risk move. The reason why we consider that a high-risk move is because we don't have any confirmation that this candle is actually rejection or if it's just exhaustion. But Black Box knows that this is basically where we have rejection points. So more than likely, he's saying to himself is, my risk is inherently going to be this. If we break this is my stop loss. As we continue up, I will manage the trade, and I will say that this is my stop, because once again, if we continue to break further down, he's just going to get buried in terms of a loss. But what he's looking at is he's saying, hey, if we reject off of here and the next candle then goes bullish, I've got a premium entry at that point. And then I can start mapping targets up here. So what he would do is probably his first target would be maybe here, his next target would be here, and then ultimately the next target would be up here. Because what you're doing is it's basically your wave pattern, right? Up, down, and now he's assuming up. The challenge with this in terms of doing this kind of strategy is the higher time frames, maybe the 4-hour or the daily, are pointing down. So this might just be a little bit of a breather before we break this and then continue on our way down that way. So that's your only risk. So when people turn around and take these positions, they have to be very, very well structured, and they have to be seasoned to understand that, hey, I can't force this trade. I'm taking the trade on the fact that we're going to reject this area here, but I'm fully aware that I haven't got a full correction. It doesn't look like this candle, or we don't have a move like this to signify that we're on this direction. Because right now, all I see are 3 bearish candles. So that's what he's doing. So that's a perfect counter trend scalp, like he said, and it's a great move. It's just, if you're a new trader, that's a very scary move for you, because you have to manage your risk accordingly, and you have to really understand the dynamics of why you took that trade at that rejection point. So that's really important there. So I mean, it's a good trade, but like I said, I mean, for me personally, I like to try and give the 90%er, like, you know, just in terms of, hey, the trend is the trend, follow the trend. But there are people that do stuff like that, so I respect those kind of trades as well. But I'm going to help you with GU right now if you'd let me finish instead of keep asking you the questions. Because you're not thinking through the GU trade, you're thinking just of the charts, and you have to think a little bit deeper. So like I said, you take a rating for each of those pairs. So the US dollar, you can give it a ranking of 1. The pound, you can give it a ranking of 1 or 2, depending on where you live. So if you live in the States, maybe you believe the US dollar is better than the pound. If you live in the UK, maybe you believe the pound is better than the dollar. The euro, you give it a ranking. The yen, you can give it a ranking. The Canadian dollar, you give it a ranking. And what you know is, like, say, for example, the yen, I give it a ranking of like a 4, right? The reason why I give it a ranking of a 4 is because it's a safe haven currency. It's a smaller currency or a weaker currency compared to like the US dollar or the pound, right? So when there's a big move and we have a strong US dollar and we have a weak yen, the UJ will move very, very rapidly, right? Now, when you correlate that with the US dollar and the pound, you have 2 big countries that if both currencies are in the shitter, you have a fight. And that's what's happening right now. The US dollar is in the shitter and the pound is in the shitter. So that's why you're not getting as clean of a move as you would with the pound being in the shitter and the Japanese yen. Because that's probably the better trade because of the fact that the yen is a safe haven. And if the pound is in the shitter, everybody's leaving the pound and putting their money into the yen. Right? People aren't putting their money from the pound into the dollar because the dollar is still weak. So that's why you're not getting the strong move that you should be getting on GU. right? So now when you look at that, that's the reason why GU isn't moving, and that's the reason why people are getting stuck in that range. The benefit when you evaluate currencies like that is when the pound is weak and the US dollar is strong, GU moves like a freight train, because now you have a super strong currency from a big country with a super weak currency from a big country, and the correlation now is so diverse. There's like a big spread on that, and it'll push a lot harder. So that's where, when you want to take advantage of these things from a fundamental standpoint, if you have something in the back of your mind telling you that, you know, the pound is weak or the dollar is weak, if you can find opposing currencies that are, you know, like a smaller or a weaker currency compared to that currency. So say, for example, gold, right? Gold is moving very, very strong because it's a safe haven versus the US dollar. So that's why we're getting these huge moves. So when you see that, you can capitalize on those movements. And that's why, once again, with GU, it's not really doing anything. It's just hanging out. How do you spot a weak currency? You read the news. Trying to learn economics courses, you can go on for free on MIT, Harvard, things of that nature. You can go anywhere for free. Just type in free economics courses, and that will help you out. How do I know what time to enter trades and which session to trade? That is something that you have to backtest, and you have to figure out what makes sense for you. So right now, if you're available at this time, you have to go study the charts and the backtesting. What the first question I always tell people, and you know, you should write this down, is I want to look on a chart and I want to see where the big candles are forming. So where did the big moves happen? And if I'm available at that time, I want to trade at that time. And I want to look every day to see where the biggest candle moves are. And that's where I want to take my positions. We say, as an example, this is resistance, or this is support, right? And we say that this line is the support line. We don't know 100% that it's this exact line. Maybe it's down over here, or maybe it's up over here. We don't know, because we're institutional traders. So you have to assign a probability, or sorry, retail traders. We have to assign a probability to say that anywhere within this area, there could be a rejection. So
more of a zone. It's more of a zone.
Right. But what I'm saying is, where do we know the zone ends? Maybe this is the zone, right? Maybe we don't know 100%. That's what I'm saying. All we can do is have a rough estimate. So we know that as we come down to this area here, anywhere in this area, I have to start thinking, and I have to start evaluating at that point and say to myself, okay, if we come into this area, chances are there's going to be a problem. The issue that people have is, what they do is they draw a line and they say, okay, it has to hit here. And then when it hits over here and then it reverses, then they're like, oh, I got stopped out. But if you had been a little bit more fluid and said, hey, in this area, I just have to be cautious and understand that there could be a directional change, you will find that you will be much better off. So when people are trading, that's what I try to employ, is the fact that, you know, you use lines and zones. Like Rakil drew out this box here, right? So we've got this gray area box. This is just to guide your eyes, just to say that, hey, once we get to this level here, guys, we got to watch out. We got to make sure that we're comfortable, because we see this, so we see information there. So we just want to be comfortable and make sure that we don't have any problems. And that's the key to trading, is being fluid enough to do that. So when you're trading, say, a Sunday night, and you know that we're just at the beginning of the market open, sometimes your targets are going to be a little bit more conservative, because you know how jumpy the market is when it's fresh and we haven't cycled through a couple of sessions. And what I mean by cycling through sessions is, I mean, we haven't had a full London session, we haven't had a full USA session, and we technically haven't had a full Asian session. So we don't know what institutions are doing yet. And that's why sometimes trading on a Sunday night is very difficult, because you have erratic movement as people are positioning themselves, and we don't know what the institutions are doing until they play their hand. And the benefit of a retail trader is we do not have to move the markets. We just have to wait for the market to move and jump on board. And that's the biggest mistake that people make, is they think that they're a market maker and that they need to be in the entry before the institution does the entry. And it's like, no, if the institution is going to drive the market, they're going to drive the market very, very hard. And that is going to be your key to win, right? So as an example here, right, if we look at this hour chart, you know, you look at this candle here and you're like, oh man, I wish I would have gotten an entry here, right? And that's 100% not a good way to think. It's, hey, I saw confirmation that we're going down. Oh wait, now here's the actual entry because I have confirmed that now we're heading in this direction. And worst case, I could take an entry here. So you can see how your mindset develops from, you know, if I took an entry over here, you have a great entry, but what's your probability of winning? We don't know yet because we have all this bullish movement over here. I can take an entry over here. I don't know yet because we still have, you know, like Rakil said, support, or I can now take an entry over here and then I have a clear move where I have now more confirmation. So that's what you do when you look in the market and you look at your confirmation or the idea of like, how would you enter a trade? That's the mindset or the approach that you would take is, okay, if we're moving in a certain direction, where is going to be the best opportunity for me to take a position with the least amount of stress? And if I can't find that, then there's no trade. But as you get better as a trader, you start to spot these ideas out more. Like Rakil was able to spot this idea here where I waited for this idea over here, right? But that's just our preferences. I was not looking to sell GJ over here or over here because to me that was not enough information. I got my information over here on the last candle and then I drove it down here, and the only reason why I did that was because I turned around and said, oh, this looks like a pretty good target because of the fact that now we have bearish momentum and it basically matches up with this side over here. Best way to prepare a journal. Best way to prepare a journal.
Flashcards.
Yeah, write down, show what you see before you take the trade and then what you see after, and then mark down your thoughts before the trade and mark down what the results were afterwards. And then start charting that out, and you'll start to see that you'll make either the same good opportunities or you'll make the same stupid mistakes, and eventually you start moving them out.
So now let's look at this GJ trade based on the 1 hour, right? So we had the support around, you know, pre-London, like 2-3 hours before London. Price made a resistance, came down. This candle broke below these candles here to the left. So look at the close. This candle closed below this candle and the support. And then we had to move down. So once you look left, you're like, okay, we had a clean candles going up. We had clean candles going down. No traffic, no consolidation. Perfect. So now if you look on the 1 hour here, you see it broke this support at 118,700, went down to the next support, 118,440, and now it's trying to do some sort of retest. So if you're looking for sells, you're looking down to the smaller time frames and see if you can get some sort of confirmation. So now if you see the 15-minute went bearish, bullish, it's trying to consolidate here. So essentially, if I'm going to be looking for sells, I'd wait to see if I can get a 30-minute bearish candle, which will be enough confirmation for it to continue moving down. So now when you look on the 4 hour, the 4 hour candle just started 24 minutes ago. Right, so I mean the 4 hour can now, when we look left, okay, let me just show this here. So when you look at these 4 hour candles right over here, you see that they closed at 118,700, but this 5 a.m. 4 hour candle actually broke below this area and closed below where these candles closed. Right, so now this tells me that okay, maybe the 4 hour has made this top wick, and now, like, you know, in the next hour or 2 hours, it's going to continue down, and then you can say, oh, look, this candle is going to fill this wick. Right, so now you're going to go into small time frames and see if you can get some confirmations, right? So I'm going to be looking for a 30-minute candle to go bearish, to finish bearish first, so that the sell should work out to fill this wick. Yeah, at the same time, if you look on the 30-minute, this candle broke below these ones here to the left, and then this should have done the retest to continue moving down, you know, but it closed back above this area. So in hindsight now you can say, okay, maybe this move down was a fake out. Can I have a buy stop at 14.99.50?
Do guys who get different information from us, well, you get the same ideas, but you don't necessarily get the resource in terms of messaging us all the time.
Oh, 1503, 1504.
Wow.
God damn gold. $40 pips from that buy stop.
You have no mercy, man. No
Yeah.
mercy.
People who sold gold just got fucked in the butt.
Yeah.
Just got butt fucked.
I love it because all I see is people saying, "Oh, it's gold to sell. I'm going to sell gold."
Wow. 1505. Can we get 1505? 1505. Oh, 1505 almost.
Yeah, there it is coming. 1505 is coming. This is what happens. This is the perfect scenario of a trader. This is should I sell gold here? Should I sell gold here? And then meanwhile, all you see is this. Like all you see is that it's like, should I sell gold in these two spots here? Should I sell gold over here? Is gold a sell now? It's like, no.
The best
is never a sell.
All right, take care, everybody.
Bye.